Welcome to Market Fatafat. I'm Sharad Dubey, and markets, if you look at it, is still in a range bound.
Yeah.
Now, this is for the 9th straight trading session. Yesterday, we did have a chat that how the markets have turned boring. But of course, there is a negative bias to it. Not to panic, but for the last 2 trading sessions, Sankita, the markets have been on a downward spiral. The important level of Nifty, that's something to watch out for. It's below 25,400 mark. And if you look at the Nifty bank levels also, there is volatility. And of course, the overall trend, if you look at it on a long-term basis, is still positive. Nifty bank trading just a shade below 57,100 mark and falling almost 125 cut in terms of index points. Now let's look at the advanced decline ratio and how the market is actually panning out. So we of course see that the most of the stocks are actually trading towards the lower side. That is, the bears are actually more powerful than bulls if you look at the broader indices as well. But let's go to the stocks which we will be focusing on. And first, we are having a technical guest coming in. Jatin Gedia is coming in from Mirae Asset. Good afternoon, Jatin. Let's start with the stocks. And first of all, I would like to just point out what are the market setting looking like right now currently. Are we going to see a bit more downward pressure coming in? Last trading session, we saw Reliance dragging the index. But now what happens?
Yeah, see, overall, we believe that it's within a broad range of 25,300 to 25,600. There could be a retest of the 25,200 breakout that we saw in the penultimate week. So, overall, still things or the Nifty is on a positive bias. However, this slow and steady grinding of the Nifty and the broader market is, a little painful. Because there is no trending moves, and this pause that we are seeing in the overall market is a little worrying the traders out there. So we believe that keep the crucial levels in mind. 25,300 is a crucial support for the Nifty, and on the upside the immediate hurdle is 25,450 to 25,500. So once the Nifty starts to trade above these levels, then we can expect a move towards 25,900 on the upside. However, having said that, 25,200 should be kept as a stop loss for all the long positions.
Alright, so that's how the market is likely to shape up, Jatin. But let's get going with all the stocks that are in focus today. Well, first up are the banking stocks that are in focus. Now, Antique has come out with a note on the banking sector. They say that the smaller private banks have outperformed the larger players in the PSU banks since December 2024. The banks with weaker liability franchise, lower floating rate loan mix and inexpensive starting valuations have outperformed. Now, in the near term, they expect the smaller private banks to consolidate, awaiting the widening of their growth profitability differential versus the larger players that are expected from quarter 3 of FY26 onwards. Quarter 1 and quarter 2 of FY26 are likely to be weak quarters with very subdued ROA due to weak credit growth, margin pressures and elevated credit costs. They prefer, larger banks, private banks like Axis, despite the near-term higher slippages expectation. HDFC Bank, ICICI Bank, Kotak within the PSU space, they like SBI. And amongst the smaller private banks, also they see greater upside potential for banks like Equitas and Federal Bank. They also like IDFC First with margin OPEX levers ahead, and Bandhan Bank is not rated by them but inexpensive valuations for it. And Axis Bank, they've given a target price of 1,400 rupees. For HDFC, the target price is set at 2,269, and ICICI Bank, the target is 1,640. On the back of that, the entire banking pack is in focus today on the back of a note by Antique.
Yes, the banking stocks are buzzing in the space, but apart from that, the reality pack, we are having Prestige Estates. Now, they are up, of course, because of a broking upgrade. Kanishka, come up with the details.
That's right. So, Prestige Estates is in focus because 2 brokerages, Nuvama and Antique, both have retained their buy call on the stock and have updated the target price to Nuvama has upgraded it to 2,009 rupees, whereas Antique, that has upgraded it to 2,195 rupees. So it's because of these bullish notes that have come in from the brokerages that the stock is in focus today. Now this upgrade follows the company's record-breaking performance in Q1 FY26. As per the update that we saw, with pre-sales surging 300% year-on-year to 12,130 crore rupees, driven by strong launches, especially the Prestige City in NCR, which alone contributed to 59% of the bookings. Now remember, Nuvama is upbeat on the company's geographical diversification and robust execution, which highlights the sharp rise in collections, completions and improved launch trajectory. The brokerage now, the Prestige's growth, visibility and annuity portfolio stability is also something that is keeping Nuvama bullish. If you look at the stock, it's been performing well through the day today and is up about 2.5% in trade today.
All right, it's Prestige Estate in the back of bullish brokerage calls coming in. But Jatin, Prestige Estate on the charts, how does that look like to you?
Last 4 weeks, it has been consolidating between 1600 to 1740 on the upside. Now we believe that this consolidation of the last 4 weeks has completed its pullback to the 40-day average, and thereafter we are seeing the next cycle of the up move or the next leg of up move, which can take the stock towards 1760 to even 1820 on the upside. So we remain bullish on the stock. The overall trend is positive. At current levels also, one can initiate fresh longs with a stop loss placed at 1640 for a target of 1760 to 1820 on the upside.
Well, there's interesting upside levels coming in from Prestige Estate. So now let's move on from real estate to real estate ancillary, that is the building materials, and of course the cement space would be in focus. JK Cement, Motilal Oswal has reiterated its buy rating, target price coming in at 7,300 rupees per share. Now the key pointers include the expansions reinforcing in their pan-India aspiration, and also the company is having a strong record of consistent operational delivery and disciplined execution. The company has a robust pipeline and aims to expand its capacity to 50 million tons per annum by FY13. Now the company is also anticipating further cost savings of almost 75 rupees per ton over the next few quarters. So bullishness coming from the brokering houses as cement stocks are also jumping in trade.
All right, moving on then from the cement pack to RailTel. Rabindra, tell us what's the news flow for RailTel?
Well, yes, RailTel Corporation of India is in focus, where company has received work order from the General Administrative Department Chhattisgarh for work order of rupees 17.5 crore, and the work order is for network connectivity, operation and maintenance, hardware procurement and commissioning, implementation of revamped integration communication. And earlier in this month, the company has received a LOI from the Central Warehousing Corporation for the work order of rupees approx 97 crore, and the company has also earlier received the letter of acceptance from Kathak Development Authority for work order of rupees 16 crore. So back of this, RailTel Corporation of India is in focus. Though the news is positive, but the stock is down approx 1%, and in last 1 week stock is down approx 4.5%.
Well, yes, IREDA is also in focus. They are expected to get in the same exemptions which PHC and RAEC were enjoying under Section 54 EC of the Income Tax Act. Jatin, what are the technical levels looking like for IREDA?
Yeah, so technically it has broken out of a falling channel today, a gap up opening, and thereafter we are witnessing positive up move. So we believe that there could be a up move towards the level of around 175, 176 on the upside, and the crucial support is placed at 166. So the risk reward is quite favorable for going longs even at current levels, and also technically there is a breakout. So things are looking positive for IREDA from a short-term perspective.
All right, moving on from IREDA to the next counter, that is LIC. Kanishka, tell us why have you picked out LIC for us?
That's right. So LIC is in focus after government sources told ET now that there has been an approval granted for offer for sale for the company. Now, Deepa will initiate this process. Now, remember, DFS has already approved QIP and OFS for 5 PSBs to meet the minimum public shareholding norms. Now, LIC, that has been a public company for over 3 years, but continues to lack that free float in the market as government continues to hold a majority stake there. Now, remember, as per the March quarter shareholding pattern, the government had a 96.5% stake in LIC, which is the same level since the company went public, as the government divested only 3.5% stake in this 21,000 crore LIC IPO that was back in 2022. And now the DFS approval has come for LIC OFS. Now the stock is trading lower, however, today with cuts of about 2%.
All right, LIC in focus in the back of that news flow, but the next counter that is in focus today is Asian Paints. Now, Asian Paints shares were trading lower after the company offloaded the entire stake in Akzo Nobel India in a large trade. Now, the transaction accounted for 4.42% of the company's outstanding equity, with 20 lakh shares exchanged at an average price of 3,651 apiece. This takes the cumulative value of the stake offloaded to rupees 734 crores. Now, the development comes weeks after the promoters of Akzo Nobel signed a share purchase agreement with JSW Paints. That deal was announced at 2,762 per share, marking a 16% discount to Akzo Nobel's market price at that time, and valued the overall transaction at 9,400 crore rupees. On the back of this, Asian Paints is in focus today, declining in trade with cuts of almost 1%.
Well, Bajaj Finance is also in focus over the last 9 to 10 trading sessions. The stock has been in consolidation mode, and the levels are also looking like a small short-term breakout might be there. Jatin, what are your views on this? Are we looking at a breakout for Bajaj Finance?
Yeah, so we are expecting an up move in the case of Bajaj Finance. Since last 4 to 5 weeks, it has been trading in a narrow range. Now this range is likely to break out on the upside, as the momentum indicators have now poised for an up move. On the upside, the crucial levels are placed at 980 to even 1025 on the upside. So we are expecting a sharp up move in the case of Bajaj Finance. The crucial support is placed at 920, so quite a good risk reward ratio for an up move to begin at current levels.
Strong risk reward ratio coming in for Bajaj Finance, and recently the Q1 numbers were also very strong, and the stocks, both Bajaj twins, had rallied. But now let's move on to Ceat. Now, of course, there's an impact coming in. Donald Trump announcing tariffs for Sri Lanka as well, but the tariffs are on the lower side, coming in at 30%. Earlier, this number was 44%. Now why this is important for Ceat is that Ceat has a business in Sri Lanka as well, and that business in Sri Lanka for export augurs well since the tariffs were lower side. So that makes it a positive when it comes to Ceat. But in day's trade today, we see volatility happening in the stock itself. Stock is down almost 2%, but nevertheless there is a momentum in the tire stocks which we had seen last week as well.
Alright, so that is Ceat declining in trade with cuts of almost more than 1.5%. But Ravinder, let me come to you for Oil India and GAIL. There is a news flow coming in there. Take us through the details of that.
Well, yes, both the stock is in focus, where Oil India and GAIL has signed a 15-year gas sale and purchase agreement for supply of up to 9 lakh SCMD of natural gas from Oil India's Rajasthan field, and the source gas will be supplied to state-run power plant Rajasthan Rajya Vidyut Utpadan Nigam Limited for the production of power. And Oil India remains committed to strengthening its upstream portfolio through continued exploration and development across the country, and GAIL play a pivot role in the monetization of the gas. So back of this news flow, both the stock is in focus.
Well, yes, up next is Tata Consumer Products, and we have seen the FMCG stocks rallying over the last 1 week, but this stock hasn't actually performed yet and still gyrating in the levels of between you could say 1000 to almost 1110 rupees. So how is the technical charts looking like? Will we see any selling more pressure when it comes to Tata Consumer, Jatin?
In fact, I'm expecting a up move because since last 3 trading sessions, it has been consolidating after a sharp up move. So we believe that this consolidation is likely to halt around the level of 1090, where we have the support in the form of the early lower Bollinger Band. So we believe that 1090 is the immediate support for the stock, and on the upside we are expecting a move towards 1125 on the upside. So again, the risk reward is quite favorable for going longs at current levels, and overall the FMCG pack is looking positive from a short-term perspective. So Tata Consumer, which has not moved up recently, has a potential to show a sharp up move over the next few trading sessions.
Alright, that is Tata Consumers on the charts. But Kanishka, you've picked up Bharat Dynamics for us. Brokerage note, I believe, has come out on it. Take us through the note.
That's right. So there's a brokerage note by Motilal Oswal. It has initiated coverage with a neutral rating on the stock and a target price of 1,985 rupees. Now, the brokerage notes that while the company did face recent headwinds due to supply chain disruptions and import challenges from Russia and Israel, those pressures are now easing. A rebound is expected as per the brokerage, backed by strong order inflows. It expects revenue, EBITDA and PAT. They are projected to grow at a CAGR of 35%, 64% and 51% respectively over FY25 to 28. With EBITDA margins on the other hand in the range of 24 to 26% and a continued focus on indigenization and backward integration, Motilal Oswal says that the outlook on this company remains strong. However, despite this note, the stock is trading over 4% lower.
Up next is BHEL, and we see over the last 1.5 to 2 odd months, the stock has been under a range between 240 to 260, trying to give a break attempt over the last 3 trading sessions. How is it looking like, Jatin?
Yeah, see, in the case of BHEL, the stock has corrected or witnessed a mean reversion to the 20-day average, and thereafter we saw a fresh round of buying interest kicking in day before yesterday. So we believe that the stock is now poised for a leg on the up move. On the upside, 275 to 78 is the level that we are expecting in the case of BHEL, and the support zone is placed at 252. So a good risk reward ratio buying. We are buying suggested to buying at support level. So this is the support level where we can initiate fresh longs.
Alright, moving on from BHEL to the next counter that is in focus, and that is TCS. That is all set to report its quarter 1 earnings today, and in fact it is the commencement of the quarter results for all the companies. And let's take a look at how the numbers are ideally going to look like. Now we are estimating at ET Now, according to ET Now's poll, for quarter 1 the consolidated month-on-month revenues is likely to see an uptick of it's likely to see an uptick of 0.8% coming in on a month-on-month basis. As far as the EBIT margin is concerned, we do see a 10 basis points uptick coming in, and on the EBIT front also an uptick of 0.2%. The PAT is likely to see a decline of 0.1%, probably coming in at 12,205 crores. But the key factors to watch out for are the exit of low-margin BSNL deal to partially cushion the EBIT margins. The segment-wise, the BFSI is likely to stay resilient. The retail, auto, and telecom is likely to remain soft. The margins are likely to see a mild contraction on slower deal executions, and the deal wins are likely to remain steady, but the conversions to revenue may remain sluggish. The few things to watch out for are the management commentary, FY26 guidance, and the TCV of deal wins. On the back of that, TCS is in focus today.
Of course, the IT stocks and TCS would be there in focus, especially in the last half an hour of trade as where more volatility comes in. But Jatin, Chola Financial, the stock itself, they're trying to make a second recovery at the 1580 levels in the month of July itself. Do you think this recovery is possible?
Yeah, see, in the case of Chola Finance, a symmetrical triangle pattern was in formation. We believe that the last leg of the pattern is complete, and yesterday we saw a sharp up move in the stock. Today it's just consolidating. However, we believe that there is a scope for the stock to move towards 1675 to even 1722 on the upside. So we believe that this dip that we are seeing today should be considered as a buying opportunity. On the downside, the crucial support is placed at 1510 odd level. So good risk reward ratio to go longs in Chola Finance at current levels.
All right.